Here on the Transparent FX Academy, every day I give you my best market breakdowns, showing you how you can be looking to analyze the market both from a technical and in order flow perspective to identify the best trading opportunities in the forex market. So without further ado, let's jump straight to the charts and see which is today's forex pair. In today's video, I'm going to make a full multi-time frame analysis of AUDUSD. First, I will be covering the technical aspect of this market. We will then go and see what we have from an order flow perspective. So commitment of traders, which is basically what the non-commercials and the biggest speculators in the market are doing. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for a potential opportunity here on the pair. Now, starting from the monthly time frame, what we can see is that here in the monthly, we have a market which has just created an M pattern. Now, in general, after the creation of an M pattern, you want to see the market create a move to the upside to go and complete the pattern itself at the previous support turned resistance. So here in the monthly time frame, in general, we do have a bullish outlook for a potential move to the upside. Going down on the weekly time frame, what we can see is that we have just seen the completion of another impulse correction and impulse pattern to the downside, with the market printing a lower low and clearly showing very strong bearish pressure. However, in a situation like this, a correction is very likely because the market definitely seems overextended to the downside. And always remember that the most natural movement of the market is impulse, correction, and impulse. Impulse, correction, and impulse, right? That is how a trend is defined. In this case, a bearish trend with a series of lower lows and lower highs. So since we just got a lower low, we now need a correction in order to then create a lower high and specifically a new lower low. So overall, on the weekly time frame as well, we can expect short-term bullish price action, as we had already identified on the monthly time frame. Just a quick thing, make sure that you leave a like and subscribe to the channel, and also let me know in the comments the topic for the next video that you will like. Going down on the daily time frame, what we can see is that in creating this massive move to the downside, which also seems to have put the market in an oversold condition, in creating this move to the downside, the market has also printed this overextended M pattern. Now, in general, after the creation of an overextended M pattern, you want to see the market create a move to the upside to go and retrace at least to the 0.32 of the Fibonacci taken on this daily impulse. So in general, taking our Fibonacci from this high to this low, we can see how we do have at 0.32, which is currently lining up exactly at this area that we do expect the market to retrace to before then creating a potential continuation to the downside, which means that we expect a short-term bullish price action back to this level. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is basically what hedge funds and the non-commercials in the market are doing, we can see how lately net positions have been decreasing for the AUD. And that is obvious. I mean, we see that reflected also in the price action with the market melting aggressively. If you see this kind of price action, it's quite clear that these moves are fueled by the orders of institutions. And in fact, we can see how we have been decreasing the net positions from a positive 3K to a negative minus 50K with 114K shorts and 64K longs. However, we can see how with the last report, 6.8K longs got added, even though we still have shorts added because clearly we are in a bearish trend, which indicates that a potential short-term correction, so for a bullish move at least to the 0.32 of the Fibonacci taken on this impulse, is quite likely before the continuation to the downside. So how we can be approaching this potential short-term longing opportunity here with students. Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the 4-hour and the other intraday time frames. So with students, we will be monitoring price action from a 4-hour perspective and lower waiting for the market to shift from an intraday bearish market as we have right now to an intraday bullish market. And only if the market will shift from an intraday bearish to an intraday bullish market, only at that point we will be adding AUDUSD to our watch list. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a good risk to reward and good probabilities at that point for the move to the upside and for the market to provide this correction at least to the 0.32 of the Fibonacci taken on the daily impulse. If you enjoyed the video, make sure that you smash that like and comment below. It really does support the creation of more free analysis education and updates for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all the rules of my rule-based strategies. Then you trade the strategies with me. Every day you get the new daily market breakdown showing you how to apply the strategies with the entry stops and take profits. And you can also ask questions and get the answer the same day with the Q&A session. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in my next video.